Good morning, and thanks so much for tuning in. I'm Alex Mathew, and this is Stocks to Watch on BloombergQuint. We've got something fresh to talk about. It might have been building up for a little while now, but we've just gotten an update on another new investor into Reliance Retail Ventures. But first, let me introduce my guest. We've got Rusmik Oza, who is Senior Vice President and Head of Fundamental Research at Kotak Securities, joining us today. Good morning, and thanks so much for joining me today, Rusmik. Uh, you know, Perhaps about an hour back, I would have asked you about the postpaid plans that Reliance Jio has in the works that will be launched or rolled out tomorrow, aggressively priced. But we've just gotten the update on the latest investor coming in. KKR will invest 5,500 crore rupees into Reliance Retail Ventures for a stake of 1.28%. And that values Reliance Retail Ventures at 4.21 lakh crore. It's a deal perhaps that was in the works for some time. Is this a sentimental boost for the stock, and is it going to move the needle at all, or do you think that we've reached as far as it comes as far as valuation of the business is concerned?
Good morning, Alex. Yeah, there's two positive news for Reliance Industries. So obviously, we expect some kind of positive impact to the stock price. As far as the KKR deal is concerned, I think it's in line with what everyone has been expecting as of now. So it gives a value of around 1 point for the stake at 4,21,000, and earlier deal also of Silver Lake was valued around at 4,28,000 crore. So somewhere the enterprise value works to around 4,25,000 crore. In our price target of 2150, we have already built in enterprise value of around 4,50,000 crore for the Reliance retail business. Most after the Silver Lake announcement, most of the valuation of Reliance Retail has come to around that 4,25,000, 4,50,000 crore mark for most of the brokerages. So to a certain extent, I think this is somewhere built in the stock price. But yes, it actually paves the way for more such deals to come in, which is sentimentally positive, and it's also incrementally positive as far as cash flows are concerned for the company. And it could also help them actually to look at some more inorganic acquisition in the space. Uh, just to give you a perspective on the telecom, also this new postpaid pricing has been very good. We expect some decent churn to happen in the postpaid segment of both Bharti Airtel. Maybe if they're not able to match the offering which Reliance Jio has done as far as the new plans which they're offering. So because I think in case of both Bharti, almost 13% of its subs are postpaid, and in case of Vodafone, almost 18% of its subs are around postpaid. So both this announcement, KKR and this telecom, is positive for Reliance Jio.
Absolutely. In fact, thanks so much for that perspective on Reliance. That's clearly the stock to watch this morning. We're also talking about the IT pack, and the reason, Rasmik, we're talking about that pack is because they've been in focus the last few sessions where we've seen a broader correction, not just for the benchmark indices, but also the broader market. So clearly, in that scenario, you have the defensives that come back into focus. But within that pack, would you bet on a certain number of companies, and for how long do you think that run is going to go on for?
Yeah. So in case of telecom, in case of software, last week, HCL Tech came out with its mid-quarter review, and they've upped the guidance on both revenue and EBITDA margin. That has had a rub-off effect on all the IT stocks going forward. So what we have seen is there is a re-rating which is taking place in the IT stocks, and we could see some more re-rating taking place because now we have got a little more visibility coming in. The higher expenditure on technology by most of the companies to improve the backbone could have a incremental business and incremental revenues for most of the IT companies going forward. So in fact, now this year we were looking at around 10% revenue growth. Next year also now we are getting some visibility of another 10% growth coming in. Two is valuations of IT companies are still reasonable in the context of the kind of ROEs they're generating. So for example, we have a Nifty 50 which has got ROE of 13% and trading at 21, 22 times. And in case of IT, we've got most of the stocks except for TCS, which trades at 25 times on FY22. Most of the other stocks trade in the range of 13 to 18 times on a FY22 in terms of valuation. and ROEs of all these companies ranges between 20 to 25%. For example, Infosys trades at 20 times on FY22, but has a ROE profile of 26%. So considering the kind of healthy ROEs these companies are generating and the defensive nature of the business in these times when the domestic businesses are suffering and there is a hit on earnings, your is a sector which is proving to be quite defensive in terms of both revenue margins and valuations, quite reasonable as compared to the past as well as compared to the ROEs they're generating. So we see still another single digit upside in the tech stocks, although the sector has outperformed Nifty in a big way. For example, since the March lows, Nifty is up 53%, 52%, I think so, and the IT pack is up almost more than 80%. But considering the renewed business outlook, I think there could be some more single digit upside in most of the tech stocks going forward.
All right, watch out for the tech pack as a whole, especially if you have a scenario where global stock markets correct further from this point, which incidentally hasn't happened overnight in the US markets. But let's talk about the third stock, and that's Sterling and Wilson Power. Now, Rasmik, a lot of people after the announcement yesterday that the Shapoorji Pallonji Group would be splitting from Tata, and the fact that Tata Group has offered to buy out SP Group's 18.5% stake, which incidentally is valued at between 1.75 and 2 lakh crore rupees. A lot of people would say, watch out for the Tata Group companies. But when I spoke to you a little while back, you said perhaps Sterling and Wilson is the stock to watch, though you don't have active coverage. Why do you say that? Is it primarily because of that debt overhang? And why is the Tata Group stocks not going to be dramatically impacted by this deal, according to you?
Yeah, so Alex, in case of Tata Group, there is no major change in the holding structure because the holding company, could remain the same. In fact, what could happen is maybe a lot of money which the Tata Group and Tata Sons was trying to infuse in the group companies. Maybe if they have to buy out the Shapoorji Pallonji holdings, then some of that fund divergence will go over there. So that is so there is a status quo for most of the Tata Group companies. But as far as Shapoorji Pallonji Group is concerned, the only listed company for them is Sterling and Wilson, and there has been an overhang of this ICD issue with the company since its listing. Just to give you a perspective, since in the last 1 year, the group owned almost more than 2,600 crores to Sterling and Wilson, which in the form of ICDs. Now that has come down to almost 1,150 crores. So they have repaid 1,500 crores till date, and still there is 1150 crores of ICD which are pending. So what happens is if this Shapoorji Pallonji group gets cash flows from the sale of Tata Sons stake, then they can easily repay this amount and that overhang of ICDs goes away from the company. On the business side, the company has been doing great. So in this year, they've almost got some orders flow of 5,600 crore as compared to just 500 crore last year in the first few months. And the order book is quite strong at around 10,300 crore. When it got listed 3 years back, or 2 years back, to say India used to account for almost 30% of the order book. Now it's well diversified. In fact, now Australia is the largest contributor, and India accounts for only around 14% of the order book. So this company has been seriously getting orders across the globe, and the order book is quite diversified. We are very optimistic on the entire solar power renewable
Right.
business globally because of the emission norms and the green energy theme which is playing out. So I think Sterling and Wilson could be one stock which can probably get re-rated if this deal goes through.
Absolutely. On that note, thanks so much for joining me, Rasmik, and for sharing your thoughts. And to you, dear viewers, there's a lot more on what we spoke on the website, BloombergQuint.com, so do check it out.